This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, August 10, 2026, and this is the New York session. Now, let's get into it. The market is screaming extreme fear, yet Bitcoin isn't dropping, it's standing still. We are locked in a volatile standoff where global equities are asleep at the wheel, but crypto liquidity is bleeding out through geopolitical cracks. As of 9/19 ET, the Fear and Greed Index has crashed to 14, a reading usually reserved for black swan events, but Bitcoin is holding flat at $64,820. How is this possible? And more importantly, is it a floor or a fuse? Before we dive into the charts, let's look at the schedule. We have a tight window of data coming in over the next 48 hours. Tuesday brings consumer price index readings on the 12th, followed by initial jobless claims and producer price index on the 13th. Wednesday wraps the week with retail sales and business inventories. For crypto, these aren't just background noise. They are the variables testing whether the current extreme fear regime is driven by internal leverage unwinding or external macro shock. Apex, what's the priority here?
The priority is isolation. We need to see if CPI and PPI data reinforce the current narrative that crypto stress is idiosyncratic, meaning tied specifically to things like the Iranian outflows, or if it starts correlating with broader risk-off flows. Right now, the VIX at 14.9 suggests equities don't care. If CPI comes in hot, we might see a convergence of fear. But for now, the data is waiting on the sidelines, while crypto digests its own structural issues.
Let's set the scene. Total market cap is sitting at $2.29 trillion, down 0.44% in the last 24 hours. Bitcoin dominance is consolidating at 56.65%. But the headline story isn't the green numbers, it's the structural void. Bitcoin futures demand has collapsed to 2024 lows. The bid side of the order book has evaporated. Meanwhile, we're seeing a massive, idiosyncratic liquidity drain. Let's look at the news driving this specific fear. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Second, CoinDesk notes that the U.S. Senate housing bill includes a CBDC ban. Third, Cointelegraph highlights that Bitcoin futures demand has fallen to 2024 lows, raising questions about institutional exit. And finally, Cointelegraph reports that core mining stock Core Scientific turned lower after Q4 results disappointed. Pulse, this 700% outflow spike sounds catastrophic for sentiment. What is the data showing us? It's creating a liquidity vacuum that is distorting the sentiment score. Yes, the index is at 14/100, which is extreme fear, but that number is artificially suppressed by the panic surrounding that 700% outflow spike. It's not just retail panic. It's a structural fear that capital is fleeing jurisdictions that are suddenly under scrutiny. However, look closer at the sentiment composition. While the aggregate is terrified, we are seeing selective alpha. NEAR is up 2.6% and Avalanche is up 1.1%. The crowd isn't abandoning crypto. They are abandoning exposed crypto. They are rotating into chains with clear institutional utility and high throughput. The fear is concentrated in legacy assets like LTC, which is down 1.8%, and leveraged positions, not in the entire ecosystem. So the fear is real, but it's segmented. Grid, let's talk about the technical manifestation of this segment. Bitcoin is flat at $64,820. That feels unnatural in an extreme fear environment. What is the chart telling you about this stagnation?
It's a pre-shock equilibrium. Bitcoin is holding exactly $64,820 with 0% change, which tells me there is no directional conviction. The volume is there, $41.62 billion in 24-hour volume, but it's not pushing price. This is a static consolidation box. Usually when you see flat price action with high volume and collapsing futures demand, it means sellers are absorbing all buying pressure without needing to drop the price further. It's a sign of weakness, not strength. Look at Solana. It's the only top 10 asset posting positive gains at $76.67, up 0.3%. Why? Because liquidity is retreating from broad market beta, which is dragging down Ethereum at minus 0.5% and LTC at minus 1.8% into specific high-throughput narratives. Bitcoin is stuck in the middle, waiting for trigger to break either the upper or lower bound of this box.
Grid, you're describing a lack of conviction. CIPHER, with futures demand at 2024 lows, how does the flow data explain why Bitcoin hasn't broken down yet?
Because the bid support is gone, but so is the ask pressure, at least from the institutional side. The 700% Iranian outflow is a concentrated drain on cross-border settlement rails, but it hasn't triggered a mass exodus from major exchange wallets for Bitcoin and Ethereum. The $41.62 billion daily volume is largely defensive rotation. Whales aren't dumping Bitcoin. They are moving capital into the narratives Grid mentioned, Avalanche and ICP. This is a flight to quality within the asset class. The lack of downside move in Bitcoin isn't resilience, it's inertia. There's simply no leveraged force pushing it down right now because the longs have already exited. The market is floating.
And that floating position is dangerous. I want to highlight the dislocation here. Equities are sleeping with a VIX of 14.9. Crypto is in cardiac arrest with a fear index of 14. This inverse correlation suggests the panic is idiosyncratic, tied to the geopolitical shock, not systemic. But SPECTER here warns. When VIX is this low, a sudden shock causes massive gamma squeezes. If those Iranian outflows trigger secondary sanctions or exchange freezes, we won't see a slow bleed. We'll see a volatility explosion. The lack of futures demand means there is no cushion. Technical support at $64,820 is illusory if there's no leveraged buyer to catch the falling knife.
A dangerous gap between equity complacency and crypto panic. Let's drill down into Bitcoin. It's at $64,820, flat. Grid, what happens if this consolidation breaks?
If it breaks fast. The absence of upward momentum in Bitcoin coupled with the flatline indicates that any small negative catalyst can expose the thin order book. I'm watching the $64,820 level as the critical pivot. If Bitcoin loses this flatline against shrinking futures demand, we expect a rapid retest of lower supports. The safe haven bid at 56.65% dominance is thin. We are essentially watching a coiled spring.
I agree on the fragility, but note the source of the tension. The 700% outflow from Iran is creating immediate sell-side pressure on centralized exchanges. If those funds flood onto spot markets, the lack of futures liquidity will accelerate the drop. This isn't just technical, it's structural. The on-chain data shows capital moving away from Bitcoin and into the utility plays I mentioned earlier. So, a break in Bitcoin isn't necessarily a crash. It's a redistribution of wealth into sectors like Avalanche or ICP.
Let's talk about those utility plays. Avalanche is up 1.1% to $6.54. Cardano is flat at $0.19. Solana is up 0.3% to $76.67. CIPHER, why is capital flowing into Avalanche and Solana while Bitcoin stalls?
It's the institutional turn. TD Securities recently identified NYSE tokenization as an institutional turning point, and Avalanche is catching that wave. Similarly, Solana is benefiting from high-throughput resilience narratives. These are not speculative gambles right now, they are utility bets. The flow data shows stablecoin issuance moving into these ecosystems, likely from the same institutional desks that are reducing Bitcoin futures exposure. It's a hedge. They are swapping leveraged Bitcoin for operational utility in chains that can handle real-world asset tokenization.
Technically, Avalanche breaking above $6.50 with plus 1.1% gain is a relative strength signal. It's decoupling from the broader minus 0.44% market decline. However, I caution against calling it a safe haven yet. It's a marginal outlier. The severity of LTC's drop to minus 1.8% reminds us that risk-off sentiment is still dominant. Avalanche is strong, yes, but it's strong relative to the mess, not necessarily immune to it.
Let's look at the laggards. Litecoin, LTC, is down 1.8% to $45.42. XRP is down 0.7% to $1.03. XRP is particularly sensitive to geopolitical news. Grid, what's happening technically with XRP and LTC?
LTC is showing classic legacy asset decay. Down 1.8% to $45.42, it's failing to hold key moving average support. The lack of novelty means it's getting crushed by the risk-off environment. XRP at $1.03 is interesting because it's barely off the day low of $1.02. It's holding, but it's fragile. The minus 0.7% change reflects regulatory drag and direct exposure to the geopolitical headline risk regarding cross-border payments. Technically, both are in downtrends. Without a fresh catalyst, they will likely continue to underperform the utility-focused chains like Avalanche and Solana.
And sentiment is reflecting that abandonment. The Reddit buzz around XRP is quiet, not because people are happy, but because the narrative has shifted to the geopolitical shocks affecting Iran and Israel. The speculative hope trade is dead right now. Money doesn't want hope, it wants utility or escape. LTC and XRP are neither. They are trapped in the old paradigm, which is currently out of favor. Let's pivot to Ethereum. Ethereum is down 0.5% to $1,907.41. Headlines mention the Monad CB BTC bridge potentially adding $5 billion in Bitcoin-backed liquidity. Does this help Ethereum?
It's a double-edged sword. The CB-BTC bridge increases Bitcoin-backed liquidity, which is good for overall ecosystem depth, but it also pulls liquidity out of native Ethereum yield strategies. That explains the minus 0.5% dip. Traders are rotating out of Ethereum staking yields into the higher-yielding, lower-risk CB-BTC vehicles. It's a flow shift, not a value destruction. However, if Bitcoin itself wavers, Ethereum suffers twice, as the collateral and as the counterparty.
Which brings us back to the risk. If Bitcoin drops, CB/BTC becomes problematic. The entire narrative hinges on Bitcoin holding $64,820. If that support goes, the yield-seeker flow reverses instantly, flooding back into cash or stablecoins, crashing Ethereum harder than Bitcoin. The VIX is low, which means the market assumes this stability. But the 700% outflow spike proves stability is a myth right now.
We've covered Bitcoin, Ethereum, and the utility rotation. Let's look at the broader picture. Apex tie this together. We have geopolitical shock, legislative friction, and a derivatives void. Where does that leave us?
We are in a structural bifurcation. On one hand, you have the macro-equity complacency signaled by the VIX at 14.9. On the other, you have crypto-specific stress, with fear at 14 and futures demand at 2024 lows. The bridge between these two worlds is broken. The 700% Iranian outflow is the wedge. It's draining liquidity from the system, forcing a rotation from speculative assets, LTC, XRP, legacy Bitcoin futures into utility-driven assets, Avalanche, XRP, Solana. The market is not crashing, it is shedding weight. But as SPECTER pointed out, the lack of futures support means there is no parachute. If the geopolitical tension escalates beyond the current 700% spike, the shedding turns into a freefall. Conversely, if the Senate's CBDC ban clarifies the regulatory landscape, that uncertainty premium vanishes and the extreme fear could snap back rapidly. But until that clarity arrives, we are in a defensive posture. Watch the PayPay IPO on Friday. If it draws liquidity, it stabilizes the floor. If it flops, the Iranian outflow drain continues unchecked.
To summarize, Bitcoin is flat at $64,820, caught in a consolidation box with vanished futures demand. Sentiment is in extreme fear at 14/100, driven largely by a 700% spike in Iranian crypto outflows. Liquidity is rotating from speculative legacy coins like LTC and XRP into utility narratives like Avalanche and Solana. The disconnect between low VIX and high crypto fear creates a fragile environment where technical support is thin. What to watch tomorrow? Keep an eye on Bitcoin's ability to hold $64,820 against shrinking volume and monitor any updates on the Iranian outflow situation. This has been ShadowQuant Crypto Edition. Stay vigilant. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.